So are you guys still there? Eric?
Yeah, we can hear.
Something just
We can
changed.
hear you.
Did someone start recording?
Is it possible to?
I don't know. I got a ding. Something changed on my screen.
I just asked Cosmo.
All right. Well,
so that could be that.
I forgot to start the recording in the beginning just now.
oh, okay. Well, I guess you just had to be here to know what the first two questions were. Whoever's watching this recorded. Here, I'll give you TLDR. We launched an Aerodrome because the user experience and their attention to detail in building, the LP UX was great. And they are really tightly tied into the Base ecosystem, which ties into the second question, why choose Base over other chains. Developer docs, I think it's the L2 to win. Access to Coinbase's 150 million users, only with the chain and people being able to use the chain Coinbase.com. Also, the fact that all Base tokens listed on Coinbase.com and exposure to all that user base, I think makes the Base eco very strong. Coinbase didn't necessarily do that, but over the years, there's been some interesting characters in the space. Brian Armstrong being, but everything they've done, I kind of agree with, like the way they try to protect all the IRS with the John Doe case back in, I think, in 2017. They just seem for people centralization, and they built a chain and L2, and they didn't launch a token, which would have been just essentially a cash grab. So for those reasons, the energy and vibes feel right in that ecosystem. And then meeting everybody that I've been meeting at the Base events, or on Twitter, or in Telegram, just chatting with some of the team. There's pretty cool people, not on the team, but just the ecosystem, the people that are on Base. Seems like everyone just kind of wants to help, which is amazing. So those are the reasons why Aerodrome and Base. Personal building ACES. So first got into my career in finance. So I have a deep understanding of how financial markets work. A lot of work I do, Big Short. So if you guys watched that movie, and that's actually what got me out of finance. Once I figured out how corrupt it was, I was like, this isn't for me. We'll sell their own mother for $1. So I left, and then I went to tech. Tech was supposed to promise us to get us to the promise, trusting everything in our lives better. So got into tech, started working at some big firms, big four consulting firms, being Fortune 500 companies, build their stack implementation strategies, content management systems, innovation, all that kind of fun stuff. Started doing an e-commerce. Figured out there was a lot of issues in e-commerce. So I started building a universal inventory system. At the time, it was called Split. Over the years, evolved into something a little different, but a way to build decentralized commerce. Start building ShopX. Learned a lot. You made a lot of amazing technology and software, and made some companies, very innovative ways to tap into revenue, having to pay Google, Amazon, or Facebook taxes, or the earned fees that they charged. So doing all of that, I learned a lot. Built some really cool, a lot of cool people along the ways, but they're missing. And I think it was, in blockchain, you're building a peer-to-peer system that removes intermediaries, which is great. So you have a seller in the case of what I've been doing in commerce, but you also have to figure out how to get retail involved, retail element in what you're building. And I think that's been a foregone thought with a lot of builders in the space, and that just kind of always ate at me. Think that governance is ridiculous. They haven't really worked. I think that, payment tokens are even worse. If you pay somebody in one token, they're sell it into ETH, BTC, or cash or fiat, because that's how you pay, bills. So those never, took my fancy either. Inevitably, they drive to zero. So I looked at some, different ways, and I've always been keeping my ear out, ear to the ground to learn how to build self-sustaining ecosystems. Fast forward till end of last year, I started getting more involved in the collectible space. Not only just from a business perspective, but personally. I always bought stuff, like units always interested me. I have stick. Not a lot of people like stick, but I find the culture. Right, that's kind of how we started driving cars. So I was always think that was more unique and social intention behind it. There was a process behind it, And over the past few years, I guess I've been opening up my creative brain, imagination brain a little more, being an engineer by trade and always thinking like an engineer and logic. So that was happening. I had affinity towards art, and just, looking things that didn't need super expensive that, my sister drew. She did, and I loved it. So with all that, like, I started to kind of get more into the finance side and seeing how, things were expensive they were, and kind of getting curious to, buy some pieces. And I do have some nice, like, collectible pieces from baseball cards, and actually I have a Kobe Bryant rookie card. I have a Yarmer Yager rookie card. I love hockey, so I collected a lot as well. Allen Iverson rookie card. So, like, I collected some of the stuff when I was younger. Some Magic Gathering cards. Really got any Pokemon cards, but I watched Whatnot and watched all unpackings. It's fun. I own Bored Ape. Those, I have tons of NFTs. What else? So, like, some, like, watches and art from us and stuff like that. So, like, it's always been a part of my story and kept on showing up over the past couple of years. And at one time, that, like, in order for these sellers to be able to, like, monetize their art, because, like, do I just it's just an investment, and I hope someone buys it for more later on. And I found out that, like, the art collectors, they always are putting their pieces on the move. You have to send it to a gallery, you have to send it to a museum, and you kind of get some money back from it. And no one really liked doing that. Then it just started selling to me. It's like I wanted to break into some art. There was a couple companies, that were doing, like, fractional ownership. No one ever implemented anything the right way, where it was, like, fun, exciting. I was seeing the right type of items. There wasn't any type of legal craziness. I didn't have to be an investor. I wasn't buying it. There's a lot of crap out there. There's nothing that I found interesting. But, like, coins, honestly. They're fun and I get a laugh out of them, but, like, with a little bit more meat, and that just needs to start to form, with my exposure to bulls, and then my, being an OG in the career over 10 years now. It just kind of came to me one day, and then I started building it. Like, the band back with the team, and was like, hey guys, get some ideas how to make some token economies work really well. Have a way to, which is the speculative aspect. Retail can speculate on the future value of collectibles. And sellers still interact more in a decentralized way. So it all just kind of fell into place effortlessly. It was all the hard work, but if 10 you made it that effortless way of something coming together. So at this point, it's me just kind of sharing a piece of heaven. That's why I tell everybody, like, we built this company like art. That's what I value these days, especially in the day of AI, just things that have been made with intention and took some time to build. So I tell the team everything we do, it's art. When it comes to experience, the website we want to make like art, not just like another database, a list of things you see. It's going a piece of our heaven. We love collectibles, and we love bringing these to out the world. So that's the story behind ACES. In simple words, what is exactly ACES exactly building? We're building a stock market for each collectible asset, so we could speculate their favorite items and favorite things and make money from it. Okay? This is really what we're instead of doing it with a stock, instead of doing it with a meme coin, you're doing it with cool shit. It's that good. Something that you want to talk about was like no one like an Apple stock, but I want to talk to you about if you own a LaFerrari coin, and following if the item is going up in value. So it just makes life a little bit more interesting and something cool to share with your friends. Holders benefit when the asset sells. So we take the 10% item and the seller in fees, and this includes all the concierge transaction fees and everything that may occur. And from that, we'll programmatically distribute to all the owners, because they were basically helping market the coin. The more popular the coin becomes, the more marketing and exposure the asset gets. They're essentially helping marketing the item to sell buyer at the highest price. So we reward them for that marketing effort. Milestone after this LP launch, it's launching the actually for the with our first this month. Make follows ACES.fun, spell it out, ACES.fun, for all latest and greatest. I'll be doing space to follow us on X and join on the spaces that will like invite some other friends and other people in the ecosystem to have chat with. So it'll be more with these AMAs we do on Sundays. We'll just ace conversation with the ACES community. Yeah, someone remembers the Delta. People join and contribute today. The thing I really ask is, just come by, and if you like it, right, and tell 3 of your friends just to join our channel and read up what we're doing and seeing what's going on. To show you anything to buy this, that's too much stress. Come and hang out, and I literally was scrolling down today. I think somebody was talking about like vegan stuff. It was really funny. Anyway, I chuckled. So we have vibes, good laughs, good jokes, good people to hang out with, and we're all going to be able to do cool stuff with cool products. Peacock, partaking in culture and talking about all these cool things. All right. Let's see more questions here. You secured collectibles for tokenization. Exactly, do you plan to bridge a gap between the traditional art sales process, which often relies on exclusive physical custody, and crypto trading, which demands liquidity? On the crypto side, how does ACES ensure continuous liquidity for such liquid assets, given that always face slippage and volume issues? Is there a liquidity mechanism in play, or the outsides? Okay, this is a long question. All right, let's break it down. So, the way we do this is that we create a digital physical asset. So like we're making a digital identity and working with a government body that has the authority in Europe to tokenize these things and legally be recorded by a body government to say that this item has a digital identity in it. So that is in the works with that body. It does pan out, and we spin off everything. But there is like some work in making this an authority legally binding with governments, which is really cool. Then you have this digital identity, and this digital identity is creating a token economy against. So we're able to get the whole full liquidity in creating and trading against identity, which is essentially tied to the value of the asset. The asset itself, and we could do things with this, like for instance, the item sells in a marketplace, and we could take the fees and rewards for token economy holders. And this token economy is basically just speculation market, speculating at what think the value of the item is going to be. And the way we do this is similar to how people trade stocks. There's a PE ratio. So if a company's making $1 million, if you take up all the shares, this should all add up into dollars, because that's how much the company's worth. We rate them on revenues. But there's companies that are trading 20 times or 200 times more than their revenue is, and we call that a PE ratio, price to earnings ratio, in traditional finance. People will pay a premium and speculating on the future price of these stocks, thinking that's going to go up because their revenues are going to go up. Well, if you take that same concept and apply it to collectibles, which hasn't been done yet, then you could start building this market that you could start seeing where the premium is put on these collectibles, the real value. If you the market cap divided by real value, you're going to get something for ACES ratio, but it's essentially just a PE ratio. And then you're going to be able to see and rank other collectibles based on the hype, according to one another, relative to one another. And this is creating something really fascinating, because we're essentially creating the real-time hype index. So we'll know what items have ultra momentum, it's trendy today in real time, and not based on illiquid sales of the item, because we're going to have 24/7 signals through the token economy. The way we do this is that we part of the ACES coin reason, one of the utility liquidity provisioning. So we're going to have to create a liquid market for all these products. So essentially what we do is we create the pairs with ACES, and this creates liquidity provisioning each item. And then you each token with, and everything gets routed through ACES. So this is why is creating the liquidity into the collectibles asset class. Let's see what else is in here. On the art sale, how do you legally and operationally execute these tokenized transfers with partners like Christie's? Does the token, yeah, so the token doesn't do anything like that. Like I said, it's not fractional ownership. It's, speculating on the future value through a digital identity and what that item is going to sell like in the future. So that's a distinct difference, because then there's no regulatory framework or anything like that we have to worry about. People could then, trade these assets and speculate on the future price, right? Just basically like a prediction market. When you're trading and doing things on poly market or whatever, essentially where you're doing against something going up or down, like a perp, which is a direction we could go down. Another additional market that we create is perps, perpetual markets, on these as well. So there's a lot of ways where ACES can grow as we get more users exposed to this. And I think this is really important because when you have these assets, and especially for a base token getting listed on Coinbase.com and getting access to older users, a person who's, in their 50s, 60s, they already bought their Bitcoin and Ripple and Ethereum, all the big ones that everybody talks about, and they're getting a little bit more curious, and they're like, oh, what about all these altcoins and stuff like that? They're going to look at Fartcoin or a Ferrari pretty easy worth use. It's a brand that they recognize, and that's something. So, yeah, I know. Of earlier today. Yeah. So okay. Well, I'm a little tired, so I don't mind cutting this one a little short if you have any more. I mean, it's really hard for me to understand what the dot is the question. Well, I guess there's more of Tigger's question that I didn't answer. It's the last paragraph. All right. So basically, when we tokenize these assets, we use a triangular way of authenticating. So look at like bill of sale, search out authenticities and stuff like that. We look at insurance premiums. We do biometrics, so we capture people's like IDs and facial recognition to ensure that the person who they say it is and they actually own any of these assets. So that's the first. The second thing is we use escrows. So when someone wants to make a purchase, money goes to escrow. So that's an escrow. The item gets delivered. Everybody signs off. If appraisals need to happen, appraisals happen. All of that's done between the buyer and the seller. They, offer you that lets them figure that out. But we provide the services for escrow. Go to escrow when everybody signs up. That's how we protect everybody in the whole flow of the transaction. Well, we personally think. Cool. AI-driven marketing. Yeah, so we're still experimenting and implementing AI across the whole what ACES. And the goal is to get to a point where we have an AI created into the marketplace and market that about the item, like a concierge, but also as a marketer. Yep, and marketing agents. So it'll be like a concierge / marketing agent. Exactly. Yeah, so platinum revenue, it's very straightforward. So all these trades, which a trading fee, 1%, that gets shared between the platform and the motivate seller products. They churn and create yield. And then, for the services, we provide a percentage. This way, we would constantly have revenue coming in to both the seller and the platform, which will constantly have, services and products to offer. This creates it to be sustainable, and we're not, working all fully circulating on everything. So we're just truly building value and use ACES as the reserve currency and provisioning to build out this whole ecosystem. Who exactly holds physical assets? Is an SPV or third-party trustee? Neither. None of them. The seller does. It's the seller that holds the asset. It's the scalability we're looking for. Everybody to do anything with SPVs or a LLC or whatever, all of those products have failed. And the reason why they fail is because when you go down that route, EV, you only out and market to accredited investors. And that just shuts out the whole point of why we're building this. But the trade this digital identity that's tied to this future value of the underlying asset. So it's good. How do you prevent double selling of an asset once it's, well, you can't double sell it. The actual asset isn't like a Bitcoin when people list it with us. So, we have a certain amount of time. There's a reserve price. If the reserve price is hit, then the seller has to sell it. If we do it within a time frame. Yeah, emerging technologies is really, AI. As AI quickly unfolding in many facets, not only with the AI concierge and the marketing on a consumer facing level, internally, the fact AI could really make our turnaround times that much faster with high quality. I don't think we're at where AI completely replaces a human, but it could augment humans to become that much more effective in what they do. And everybody on our team is fully AI efficient, like sufficient. It doesn't matter for anybody in the marketing team or the business development team or the tech team. Everybody's using AI, and not just like a chat GPT asking questions. Everybody on our team has Cur downloaded. And even if it's more, it's like, okay, write me some Python scripts to automate AI and emails to refine the message to get better open. Like we're integrating AI, in a workflow, which is making us be able to move really fast. What happens to holders if the unauthorized damage, stolen, or disputed? I don't know with you. The market cap could go higher because that item becomes even more rare and it becomes it go to zero because there's some sort of issue that came along with it. It's just, this is all at your own risk. Do everything we can, to protect the authenticity of things. So this is why we don't let anybody just come list. So, there's an authenticity later in the services provide. There have been some conversations where we could even can assure some of these things. But that's like, a year, 2 years down the line. Well, let's first things first, let's build the speculation market first. Let's build all the tokenized assets and get them trading. We could start talking more about like insurance markets against these items. The 1% fee rev for the platform, essentially, can there be a revenue to split for regions who bring sellers to the platform? The sellers or an agent of the seller. So this is exactly what we do, and this is what incentivizes sellers to their products with us, is because they could start creating yield immediately for a liquid asset. Growth or engagement loops. Yeah, like everything we're doing is grassroots. Just good vibes, not pushing anybody to do it. We like asking everybody to tell 3 of their friends or family to join this chat, and then let the chat community, the product, for itself. One proof of Banksy, it'll probably be second or third. That won't be vaulted. I have to check. There's self-custody, custodian. So there is Banksies. It's probably the second or third thing. So it'll happen a lot faster than you think. Yeah. The layer that's going to basically acknowledge that this digital identity of this Banksy exists. Yeah, honestly, but you could buy it. That's the cool part. You could spend crypto to buy it too. Just put it in an offer, and if it hits the reserve, then that Banksy could be yours. Speculating on its future value, or it could actually buy the underlying. Either way, there's a way for you to kind of be part of history and part of this culture. Can we have multiple owners? I don't know what that means. I suppose, yeah, and they could then decide how to split amongst themselves. That has nothing to do with me. Yeah, hey, I don't think you're really understanding what I keep on saying. There is no ownership. It's not fractional ownership. You're speculating on a future value. So the tokenization is tied to a future contract, which is the asset. So you're speculating on the future value. It's like if you go to Poly, you go to any eventuals, which lets you speculate on the future value of. If ACES succeeds, how would it change the way people perceive intellectables globally? Well, it will give them access to an asset class that's pretty liquid, and the exciting asset classes, most interesting, like gold and other is still behind it. And if I was going to want to be speculating, nothing else. That's a bingo. Exactly, NJ. Yeah, 100%. I definitely think the ACES ratio can evolve into the industry-wide standard. The main key factor here for that to happen is volume. If we have volume of these assets, volume turns into data points, and data points turns into power for these to be able to know, be the prediction market for the actual underlying marketplaces or auction houses, and we'll know what's culturally and what's going to sell better before they do. So, we'd be in a very full position in the collectibles market space, able to create this real-time, highly unified metric with the ACES ratio. So performing better than others. And this will inform investors or speculators in the collectible space, where items are going to be worth more in the future. This does not happen if it's fractional ownership, which is not. I don't think it's. I need to convince Gen Z or millennials, and building in such a cool way. And I think that in itself, build an attention. One person uses it, another person uses it, another person makes some money trading their favorite collectible, and then kind of just snowballs from there. That's the best organic way of building this. Get cultural collectibles. I mean, a lot of people that are NFT is a collectible. Yeah, thanks for the questions, NJ. If you're just getting here, we're going to be doing this every week, same time. And on Wednesdays, we do our spaces. So, make sure to go and signal us at ACES.fun. ACES.fun was a living organism creature. Would it be? Mm-hmm. No answer. Yeah, you kind of, I got you, bro. All right, Eric, you want to hop up here too? Eric.
Yeah, what up?
Get off mute. Anything else you want to rehop? Maybe a question you have, thing you noticed, or something.
I've been getting tons of spams, stage product, and telling your friends, getting them, because like when a new person hits, they just get stoked, and that inspires them to do their own research. And at that point, we pretty much got them. So to keep up the great work. You're really